Japan's economic status has slipped to the world's fourth largest. It now trails Germany due to a contraction in economic activity during the final part of 2023. Japanese officials announced that, between October and December 2023, the economy had a slight decrease of 0.4%. Moreover, it faced a significant contraction of 2.9% from July to September in the same year. Experiencing such a decline for 2 consecutive quarters often implies the economy is going through a recession. But what can be the possible reasons behind this downturn? Let's explore some key factors that led the once fastest-growing economy of the world to this path of slow growth. But before that, subscribe to the channel and get started. The Japanese economic miracle. In 1945, Japan's economy was in a state of absolute ruin following the devastating effects of World War II. Those few years right after the war were spent battling hardship to regain stability and rebuild what had been destroyed. From the 1950s to 1980s, Japan witnessed a substantial economic rise, which was referred to as the Japanese economic miracle. The surge was primarily driven by the extraordinary growth of industry manufacturing, the establishment of a vast local market, and a bold, export-oriented trade strategy. The Japanese economy transformed, embracing a rich mix of manufacturing and service industries. They emerged as one of the global powerhouses in the production of automobiles, steel, and cutting-edge technology goods, with a particular focus on consumer electronics. They didn't stop there. They promoted their industry with clever policies too. They shielded their local companies and supported them, helping them get stronger and more competitive. This way, when they went out to sell in the global market, they could hold their own. The lost decade. In the late 1980s, a sudden, unrealistic surge in stock and property prices was often called a bubble. When this bubble popped at the start of the 90s, it led to a harsh economic decline. Throughout the 90s, Japan's economy was almost at a standstill, earning the decade nicknamed the Lost Decade. As the 90s closed, Japan found itself in a deep economic slump. A decade and a half ago, Japan gracefully stepped down from its position as the world's second biggest economy, allowing China to take its place. Since then, Japan has struggled to regain its former position and status in the global economy. So, what could be the reason for Japan's economic slowdown? Aging population. Some analysts believe the country's aging population and low birth rate have resulted in a decline in its workforce. This means that fewer workers are contributing to the economy. The country isn't home to many people from other countries. On the other hand, Germany's population has swelled to almost 85 million people. The increase in people coming from other countries to live in Germany has offset their low number of births. As we move into the year 2024, nearly 30% of all individuals residing in Japan are 65 or older. This statistic sheds light on Japan's low birth rate and longer lifespan, factors that are contributing to an aging populace. It's projected that by the year 2070, older adults aged 65 and above will represent a staggering 38% of Japan's total population. Japan has one of the highest life expectancies in the world, with women averaging around 87 years and men around 81 years. This population cannot contribute to the working sector as they have already retired. One approach to addressing the issue of a lack of workers in Japan is encouraging more people from other countries to come and work there. However, Japan hasn't been very welcoming to workers from overseas. Additionally, with increased life expectancy, there is a higher demand for social services such as healthcare and pensions. This puts added pressure on the government's finances as they struggle to balance their budget. Global capital flows. Between 1955 and 1975, Japan witnessed a remarkable boom, followed by a stable climb up to 1991. These trends didn't just happen in isolation, but were a part of a worldwide expansion of trade. While Japan reaped significant advantages from the globalization of commerce in the aftermath of the war, it didn't massively succeed in the sphere of global capital circulation. both Japan's public and private sectors fell short in leveraging the opportunities provided by the deregulation of capital movements in comparison to the successful exploitation of global trade liberalization. Japan's large quantity of assets held in dollars overseas has disappointingly yielded low returns. The country's attempt to break free from economic standstill was further hampered by the Asian financial crisis that took place between 1997 and 1998. In contrast, Japan's manufacturing sectors were better equipped and more successful in capitalizing on the global expansion of trade. However, they were less adept at taking advantage of the prospects brought about by the liberation of capital flows on the global scale. Rise of competition. As other countries have caught up with Japan's manufacturing and technology prowess, it has become increasingly difficult for Japan to maintain its dominance in these areas. With increased competition from China and South Korea, Japanese companies face stiff competition, leading to declining exports. The global economic landscape has also changed with the rise of emerging economies like India and Brazil. Japan's reliance on high-income markets may no longer be enough to sustain its economy. Structural barriers. The intricate layout of Japan's political and economic operations, especially the tight mutual relationships between financial administrative bodies such as the Ministry of Finances and the entities they supervise, like banks and insurance firms, has also added to Japan's difficulties. The Ministry of Finance's banking bureau and the banking sector rely heavily on each other. The situation lacks clarity and public responsibility. Information on the real extent of bad loans is hoarded. Outdated crisis management techniques, like administrative advice, still dominate. These factors contribute to understanding why the government took a long time to stop the severe bleeding of Japan's financial system. Though Japan has advanced towards having a clearer, rule-driven system, the issues related to a lack of transparency and weak responsibility still persist. Stagnating wages. Japan's sluggish economic expansion is partly due to the stagnation of salaries. This means that individuals have fewer resources to inject into the economy. In parallel, corporations are pumping substantial capital into overseas markets, bypassing Japan's older, contracting local market. This combination of low wage growth and lack of investment in the local market can easily ruin any economy. The median wage in Japan has only increased by 1% over the past 2 decades, while corporate investment overseas has risen by nearly 50%, but only 10% domestically. Agriculture. Japan's geography is dominated by mountains, significantly reducing the amount of land available for farming. The soil in the country is mostly unproductive and underdeveloped, necessitating meticulous care and the regular use of fertilizers for successful cultivation. As a result, Japan's food production falls short of its domestic needs, forcing the country to rely heavily on importing food products. This not only strains the country's economy, but also puts it at risk during times of global food shortages. Yen depreciation. A significant reason for the bubble, ongoing asset depreciation, and the money trap in Japan is the sharp and continual decrease in value of the yen in comparison to the dollar. The impact of currency exchange has hampered certain strategies that could have resolved Japan's financial crisis. In the early stages of 2022, the value of the yen took a dive, dropping roughly 20% when compared to other big league global currencies. The yen's value plummeted even further, falling by around 30% when stacked against the American dollar. This drop in value can be traced back in part to steps taken by the Bank of Japan. In 2016, they implemented a policy called yield curve control, an attempt to ease monetary policy, which has had an impact on the yen's value. While the reasoning behind this decision may be complex, its effect on the yen's value is clear. As a result of this policy, many investors have shifted their focus away from the Japanese market in search of more profitable opportunities elsewhere. Continuing recovery efforts. Despite all these challenges, Japan has been trying to revive its economy and address the underlying issues. The government has implemented various policies to attract foreign investors and encourage growth in key industries. They have also increased their support for startups and small businesses, hoping to revitalize the economy from the ground up. Moreover, Japan has been focusing on international cooperation and trade agreements with other countries, such as the recent EU-Japan Economic Partnership Agreement. This is expected to boost exports and create new opportunities for the country's businesses. Japan may have faced significant setbacks in the past few decades. Still, the country continues to work towards regaining its economic strength. What do you think will be the future of Japan's economy? Will it regain its former glory or face more obstacles along the way? Or will other countries continue to surpass Japan's economic power? Comment your thoughts down and give this video a thumbs up.